Thank you very much for staying and welcome back to the Marketplace. In our first story, government has reached an agreement with commercial banks in clearing debts owed by players in the energy sector. The debts are said to have hit about 8 billion Ghana cedis following the inability of players like the VRA to pay back the loans on time. The development is currently threatening the existence of some commercial banks, with reports that some are on the verge of collapse. But President of the Ghana Association of Bankers, Alhassan Andani, tells Joy Business the agreement will result in these debts being cleared over the next 5 years.
So long as that tax flow is stable and your source of repayment is no longer in doubt, the threat of further impairment is removed. Because if those debts were still sitting on the books of the financially distressed state-owned enterprises, then there's no certainty of payment. But under ESLA, the certainty of payment is there, the tax levy flow. And we've looked at the cash flow models. In 5 years, all of that should go.
So you've reached agreement as we speak right now, or we are crossing the T's and dotting the I's?
Crossing the T's, dotting the I's to clear the debt. For us, what is important is that the means to repay is what is critical. It would have been totally, worthless, dotting I's and crossing T's if the source of repayment wasn't there. ESLA gives us a very definite and a sure source of repayment.
All right, now, the country will later this year issue its first local bond that will be paid over a 10-year period. The bond, which will be sold in this November, will be seeking to raise some 200 million Ghana cedis. But could this help reduce the cost of credit in the country? George Rafi tells us more.
For persons close to government, the decision to go ahead with this long-dated bond couldn't have come at a better time. This is because government had complained about the time it often had to pay back most of these bonds. It was therefore looking at ways to lengthen the time. Hence the decision to issue more 7-year bonds and now a 10-year bond. The Finance Ministry had argued that issuing these long-dated bonds will leave the short-term borrowing space for businesses, whilst government concentrates on long-dated bonds, so you can have enough time to use some of these funds for major infrastructure projects in the country. Some analysts say the development could go a long way to reduce the cost of borrowing in the short term as government concentrates on long-term bonds. Some economists have argued that the main drivers of the cost of borrowing in the country are inflation rate and treasury bills, rather than the Bank of Ghana's policy rate. Currently, government is borrowing on short-term notes with an interest rate of about 23% and 24% on long-dated bonds.
Now, Finance Minister Setekpe has been giving a breakdown on how all the energy debts in the country will be cleared at a meeting with some journalists. Now, sources say the engagement is part of plans by government to assure investors it is committed to clearing these debts. George Rafi was at the press conference and he has joined me in the studio right here to tell us more. George, good afternoon.
Good afternoon, Rafi.
So what is the Finance Minister telling us? In the first place, what is the totality of the debts?
Well, basically, as we speak right now, the Finance Minister is saying that for the VRA debts, we are looking at around 4.4 billion Ghana cedis. Wow. And that is the debt for VRA. There are also other debt for the Tema oil refinery, the BDCs. But as we speak right now, there isn't a finality on the actual figure with respect to the BDCs and Tema oil refinery. Now, the question I know you want to ask me is that how would these debts be paid? Because you're talking about details.
Sure.
Well, he's saying that there were some taxes that were introduced recently. The energy sector debts that were introduced. Now, these debts, they've accrued almost about 1 billion Ghana cedis. But 250 Ghana cedis, 250 million Ghana cedis will be the first tranche of payment that has been done as we speak right now to the Volta Revo Authority. Now, the other arrangement is that VRA is supposed to be making some money anytime that they sell power. So spread over a 3-year period from their receivables, they'll be making some payment into a separate account that has been set, which these monies will go into, and gradually they will pay this debt. For toll debt, we don't know as at now, but what we know is that they'll be issuing a kind of a bond over a 10-year period to settle these debts.
So was he able to tell us how much exactly has been accrued out of this energy?
I think that we are looking at, from January to date, almost about 1 billion Ghana cedis in terms of the actual monies that we have received. But again, you want to ask yourself, so what's the way forward? Well, for the banks we have been engaging them, their argument is that, listen, this couldn't have come at a good time because, there's an issue about a confidence issue. This whole debt has affected the ability to give credit to people like you. If you walk into a bank today and looking for a loan, it'll be a little bit difficult because some of them, their balance sheet has really been troubled as a result of this. But you're saying that now that they've had a concrete arrangement, this is documented, this is not hearsay. It means that basically they can use that commitment from government to convince their creditors that, listen, these debts that are on our books is going to be paid over this period. So don't worry, things will normalize for us over the 3 to 5 year period for the VRA debt. If you're talking about the TOR debt, they were looking at more of a bond being issued very soon, and that could be used to clear the TOR debt.
Now, was there any assurance that this is not going to recur? Because over the years,
you're right on that. I mean, when government decide that we are going to stop subsidizing and stepping in to stop consumers from paying X amount, then it goes back on its word. But when I spoke to the finance minister, his argument was that, George, this would not happen. That is a promise coming from me. But again, let's look at the broader impact on the economy and business. Don't forget that this thing was one of the critical targets under the IMF program, that clear these debts, give us a plan, a structure to clear these debts before the fund would go ahead and put together some good report and forward it to their board. It looks like per this arrangement, we might be getting closer to getting a good report from the IMF staff team that are in town, and possibly that 28th September board meeting might come on. Now let's look at the banks themselves. The banks have been struggling. Some of them are even on the verge of collapsing. With this arrangement, they could be coming back on the strong footing. Now they can then unlend these monies to businesses, or they can use this guarantee to go out and source for credit and on lend to businesses. Again, you're looking at the fact that impact on the cost of credit. When you go to a bank, anytime you walk into a bank, when they are pricing your loan, they factor the inability of maybe your brother to pay those loans. So if these debts are being paid, or they'll move from a non-performing loan to a performing loan, it could go a long way to reduce marginally the interest rates that we are seeing these days, just because of these huge debts that were on the books of these commercial banks.
Obviously, George, it is a laudable idea, but would this impact on foreign direct investments in any way? How would it
it would, because don't forget that some of these debts were also debts that some of these local banks owe the foreign banks, because these are foreign transactions. Some of these companies, BDCs, they were bringing in crude from outside, letters of credit, correspondent credits, and all those things. So if, for instance, a bank B in Ghana was owing Citibank somewhere some money, you pay that money back to Citibank. Citibank is now convinced that I can go ahead and do transaction with one Emmanuel Yafe who is into business in Abosokai and credit you about maybe $10,000 to do your business.
Okay, that's good. Thank you very much, George.
Thank you so much, Yafe.
George Yafe updating us on how government intends to clear the outstanding energy debts. You're still on the markets, please. Now, Africa's second biggest economy, Nigeria, has slipped into economic recession. Latest growth figures show that the economy contracted by 2.06% between April and June this year. The country has also seen 2 consecutive quarters of declining growth, the usual definition of a recession. With crude oil sales accounting for 70% of government income, Nigeria's oil industry has been hit by weaker global prices. The price of oil has fallen from highs of about $112 a barrel in 2014 to below $50 a barrel. All right, so now outside the oil industry, the figures show the fall in the Nigerian currency. The naira has hurt the economy. All right, so we're trying to link up with Olatunde Agoy from Nigeria, AFP Nigeria, and as and when we get to him, we would like to know the exact details growing up in Nigeria. But for now, we have Patrick Stevenson on board. He's an economic analyst to tell us what exactly this means for Ghana and other West African economies. Good afternoon. Welcome to the marketplace, Patrick.
Yeah.
Good afternoon.
Yeah, hello. Good afternoon.
All right. Now, Patrick, can you tell us what exactly is a recession, an economic recession? What does it mean? Hello?
Hello, this is Tunde from Nigeria.
Okay, all right. So, Olatunde, Yes, good to have you on the line. Now, tell us exactly what is going on. When was it announced, and how is the country taking this whole thing?
Yes, well, you should know that what is happening in Nigeria is really a very serious problem for the sub-region of West Africa. Don't forget, Nigeria is the biggest economy in Africa, in the continent. And the Bureau, the National Statistics Office, National Bureau of Statistics, released a confirmation of that Nigeria has really slid into recession. What that really means for the continent is that whatever happens to Nigeria will have a very triple effect on the larger economies of the continent, particularly the West African region.
Now, Ola, before you go on, what exactly has accounted for this situation, the recession now?
Yes, the thing is that since 2014, Nigeria has been having a kind of declining revenue from oil, because oil is the mainstay of the Nigerian economy, and because of the global slide in oil prices, government oil revenue has plummeted, and this has affected government spending. So, and coupled with that, there have been militant attacks in this region, which has significantly reduced output. So Nigeria is getting less money. And this has affected infrastructure development. Manufacturing is not produced, manufacturers are not producing, so there is no growth, in fact, negative growth on 2 consecutive quarters. And when a country, an economy, records negative growth in 2 quarters successively, it goes into recession. That is the situation for Nigeria now.
All right, now, so apart from oil, you're over-dependent on oil. I mean, hasn't the country, been embarking on any diversified forms of economic development to actually, in times like these, revert to other economies that could help us resuscitate the economy?
Yes. The new government that came into power since May last year is trying to diversify the economy. Because, like I said, nothing is coming in terms of revenue. The oil from the oil sector has gone down. So government is trying to look at agriculture, look into manufacturing, look into mining, look into other sectors to reflect the economy. But the effect of all these measures has not really come to fruition. But right now, Nigeria economy is in a blind, kind of.
So right now, what exactly does it mean for Nigeria?
What it means is that there is low growth, the economy is not growing, then there is unemployment, there is no production in terms of contribution of manufacturing. So the problem that there is social tension in the country now because the Nigerians are hungry. I mean, people are not getting jobs, mass unemployment rate, and the rising inflation. For the first time, in July, inflation is 17.1%, which is an 11-year high in the country. So there is general increase in price level.
All right. So would you be able to tell us what next for Nigeria? What is government doing to mitigate the impact of this economic recession on the people of Nigeria?
Yeah, government is reassuring Nigerians that it is, first of all, that we have to tighten our belt. That is a reality we really have to be confronted with, but that efforts are really ongoing to diversify the economy from dependency on oil and also look into areas that can really revitalize the economy, like agriculture, manufacturing, mining, and even entertainment, because these areas, potential areas for development.
Has the length of time been predicted? When do we think this is going to, to last?
Well, the outlook is very bright. Government is saying that by the last or third quarter of this year, that there will be an improvement, but that we should not expect a kind of 100% turnaround. It's going to be a gradual process. That by the time the policies in place really come to fruition, that Nigeria will smile again.
All right. Thank you very much, Olatunde Agoy from AFP Nigeria, telling us about the impact of the economic recession, actually, that Nigeria has slipped into at the moment. It's on the marketplace. Now, pharmaceutical firm Danex says it expects a complete takeover of Ayrton Drugs by October this year. Danex last week announced its intention to acquire more than 50% stake in Ayrton Drugs from South Africa pharmaceutical firm Adcock Ingram. Analysts are describing the takeover as one of the biggest in the industry so far, which could make Danex one of the largest also in the industry. Chief Executive of Danex, Yao Pare Asamoah, tells Joy Business the acquisition could consolidate its position on the market.
Just to clarify the statement, we are acquiring 53.47% of Adcock shares in Ayrton. What that means is that Adcock Ingram, the South African majority shareholders, are going to retain 25.1% in the business. So they're going to participate with us going forward once the deal is concluded. Well, the conversation we had with them has been purely based on this 53.47%, which is the majority, which allows us to manage the business. So at this point, this is a conversation we've had, and we've made it clear to the SEC.
The economists will say all other things being equal. I mean, when are you hoping, subject to securing the necessary regulatory approvals and all those things, you're hoping to close this deal for you to be able to take over these shares?
Well, as we speak, we've requisitioned a waiver from the Securities and Exchange Commission. So it lies within their bosom to be able to give us the timeline for us to conclude the transaction. We're waiting for their response from this requisition. And once we have it, we'll be able to conclude the transaction.
Are we hoping that that could be done if everything, I know you pay your transaction advisors, you even have a timetable. If all things should go very well and as quickly as you have planned, could that happen by October or even by November or even earlier than that?
Well, we'll give ourselves to October. I believe it's reasonable time.
Yao Pare Asamoah, Chief Executive of Danex, talking to my colleague George Wiafe. We're taking a short break. Marketplace returns shortly. Thank you very much for staying and welcome back. Now, the local fine art industry appears to be on the decline, especially with the advent of technology. Many artists with great potential are skeptical about pursuing a career in fine art because it doesn't seem to pay. Now, government investment in that sector also leaves much to be desired. But to appreciate the economic potential of art, later today on the Joy Business Van, we'll be telling you the story of one artist, Ifwa Asabia Esari, who is making it big with quite a unique art form.
Asabia recognized her interest for art at the age of 13. It was never a struggle to get her fingers to do something creative. But it would not be until her early 20s that she would realize her love for painting.
But when you talk about drawing, I started doing that on fabric. I started doing tie and dye. I started doing batik many years ago. I was doing that and I was selling. It was fetching me money and it was good until somebody saw my artwork on a t-shirt and said, this is good. Why don't you do this on canvas? And that was a Bloody Clover a very long time ago. And so it inspired me to put art on canvas. And then I started to paint. And even then, not seriously.
Asabia, however, had other interests: to work for the corporate world. Then she lost her job. She would then decide to pay more attention to her passion.
All right, so the full story of Asabia will air on Business Live later today at 5 p.m. The shea butter factory in Buipe in the northern region, PVC Share Limited, is expected to resume operation by the end of this year after being dormant for almost a year. This comes as engineers are finalizing reinstallation works on a new plant expected to operate at an increased capacity of 200 metric tons daily from an earlier 100 tons per day. The factory, which directly employs almost 100 people, became dormant due to technical challenges, a situation which has led to some joblessness. Speaking with Joy Business, Chief Executive of Produce Buying Company, a majority shareholder of the company, Maxwell Atakra, said a revamp would positively impact the local economy.
There were problems with the plant. One part of the plant
We sincerely apologize for that our inability to play you the full version of that story. Now, local fisher folk have been advised to sharpen their predictability skills to effectively implement international best practices in fish production and exports. This comes after research revealed that fisher folks rather adopt traditional methods in their operation. But the chairman of the Standing Committee on Research and Statistics, who is also an associate professor at the University of Miami, Dr. David Dye, says the need for a change cannot be overemphasized. He spoke to Joy Business at a workshop organized by the International Commission for the Conservation of Atlantic Tunas, ICCAT, in partnership with the Fisheries Commission.
Well, fishery management is always challenging, and the implementations of the recommendations and the resolutions is often the biggest challenge for all participants, and particularly for developing countries. And I think one of the things that this new management will provide in the future is more predictability and less change. So if you need to adapt to management regulations, and that adaptation is a challenge today, hopefully through this process it will be less challenging because it will be more predictable. The countries will know what's going to happen in the future under harvest control rules. The rules should be simpler under the management and the control rules that the current management that may change every year. As you know, those decisions, the countries don't always have the ability to adapt quickly to them. But hopefully this new management will actually be more predictable and therefore less challenging.
And on that note, we wrap up on this afternoon's edition of The Marketplace. Thank you very much for your attention. For more business news updates, come on the Business Live later at 5 p.m. for more developments in the world of business. Meantime, you can stay interactive with us by tweeting at Joy Business GH and by Facebooking Joy Business is our page. For more business news, log on to myjoyonline.com/business. My name is Emmanuel Abuaji Riafi. Join me again for another edition of The Marketplace tomorrow, right here on your Joy News channel.